Good morning, App Properties. I hope you're all doing well this Thursday morning, April 9th. Thank you for joining me. I'm Amy Corr, and I'm here with Kevin Van Eck, who is dialing in from our Goose Island office. Good morning, Kevin.
Hey, good morning, Amy. Good to see you. Good morning, everybody. Thanks for joining us. Today we have a good topic again. I say that every day, right? So today we have a great topic. A few weeks ago, we talked with a VP from Proper Rate. And at that time, we were talking specifically about how closing procedures happened and then about some volatility in rates. Well, at this point, we have closing procedures for the most part down. So we've got that settled, but there is still volatility in rates. So we wanted to bring on someone else from Proper Rate to be able to speak to that and some other questions we had about lending in the current environment. In addition, we thought it would be important to bring on an appraiser to get the appraiser's perspective and a couple notes on how they're handling things safely, and also if there has been or if there's anticipated impact in terms of the housing values with everything that's going on. So Amy, you want to introduce our special guest today?
Sure. Thanks, Kevin. So we're excited to have David Weinberg, one of our Proper Rate loan officers with us this morning. In addition, we've got Tom Schurer joining us this morning. Tom is the owner of Valucentric Appraisals. So good morning, guys. David, Tom, thanks for joining us.
Good morning.
Good morning. Thanks for having us.
Yes, thank you. We appreciate you coming on bright and early, and I know you both have your coffee mugs filled to the brim. So David, wanted to start with you a bit. Can you give us a quick update on the mortgage rate market right now?
Yeah, absolutely. So the good thing is we've seen rates really stabilize here. A big part of the economic stimulus package was specifically for mortgage-backed securities to bring some stability into the market. As you know, we saw a ton of volatility 3 or 4 weeks ago when the crisis hit. And today we've really seen that settle down with the big purchase of mortgage-backed securities. So really happy to be able to report that we've seen stability. We are not seeing the wild swings in rates that we saw 3 or 4 weeks ago, which is really obviously going to help the purchase market and be able for us to guide our clients the right way.
Got it. Thanks, David. I know that there are questions too out there or predictions based on articles that we're seeing in terms of pressure on mortgage companies. So some people have said, whether they're experts or not, some people fear that there's going to be a reactionary spike in rates due to that pressure. Is that?
Yeah, I mean, I think that's what we saw a month ago when there was a massive amount of uncertainty, illiquid markets, volatility. I think what the Fed has done really is to stabilize that, is to take that pressure away. Look, we don't know what the future is going to bring. This is unprecedented times, but the whole point of what they're doing was to stabilize. It was to take away that uncertainty. So I don't lose sleep over the volatility right now, over rates spiking or having to charge points to get a certain rate. I just don't think we're there at that point, and it would be counterintuitive to what these programs are all about.
So that being said, we saw some volatility, and I think it made a lot of people nervous as far as, locking in and securing a rate. So, you feel pretty comfortable that, that kind of happened, but moving forward, we're going to see a little bit more of a, kind of a stability in rate. So for those moving forward in purchasing, when is the best time for them to lock in a rate right now?
Yeah, it's a great question. And the answer today is the same as it would have been 6 months ago for me. You sign a purchase contract, you have your deal solidified, you should be locking in a rate, because outside of this coronavirus and this sort of pandemic that we're in the middle of, other things happen economically, globally, that could make rates move. So if you know what your rate is today, lock it in, be done with it, take it off your plate. None of us can predict what rates are going to do tomorrow. As I always tell my clients, if I know where rates are going to be tomorrow or next week, I'm not talking to you. I'm sitting on a beach in Hawaii trading interest rate futures. So much better to lock it and be safe today.
And when you end up on that beach, please invite us, because Amy and Kevin would like to do our show from the
Done
beach.
Done deal.
With that, though, with rates still moving around a little bit, are there opportunities for buyers if they go up or down? What happens with rates at that point? Are there other options?
Yeah, absolutely. So look, once you lock in a rate, provided the terms of your loan don't change or the deal changes somehow, the rate that you've locked in should be the rate you're closing at, right? But the big question that comes up is what happens if rates really drop during the time that we're in process? So the really nice thing at Guaranteed Rate, Proper Rate, is we have a mechanism for that for most loan products. So a Fannie, Freddie loan, FHA, VA, and even some of our jumbo lenders, there's a process in place that if rates really drop, we can help on a one-time basis. There are rules around it, of course, like everything else, but once you're within 25 days of closing, the appraisal is in, we can then look and see if there's an opportunity to renegotiate or float down the interest rate. We don't want to leave anybody hanging out there if rates drop 0.5% or something like that. We're going to do everything we can to take care of it.
That's great. So I want to talk a little bit about this word forbearance that is floating out there right now in kind of this new norm. Can you explain what that means? And, let's talk maybe a little bit about, who should be looking at this forbearance situation and potentially taking advantage of it.
Yeah, absolutely. So forbearance in simple terms is an agreement with your lender to stop making payments for a certain period of time. So the word forbearance obviously has come up a ton over the last couple of weeks, and I just read that forbearance requests are up about 2,000% in the last week. That's a pretty massive number. So under the CARES Act, which is this new act, that pertains to, again, government-backed loans or government-sponsored loans, Fannie, Freddie, FHA, VA, right? And the first round is 6 months of no payments. There is a provision that potentially to go another 6 months, but much like the unemployment stuff that Mike has been sending out, it's a bit of a moving target on the repayment. So we are hearing from some people that repayment would be a lump sum after the initial forbearance period. I think that'll be difficult for people. It may get tacked onto the back end of the loan. So there are mechanisms in place. Some of them are a moving target for sure. And then what you have to be careful with is jumbo loans or a non-government sponsored loan like a portfolio loan. In all of these cases, you should be calling your servicer to see exactly what they're going to offer. Ask the right questions. Is it going to affect credit? It should not affect credit, especially if it falls under the CARES Act. And then find out exactly what the repayment terms look like moving forward.
Thank you. Yeah, so it's really important if we're advising our clients to make sure that they communicate with their servicer before they sign or get into any of these programs.
100%. Just make sure you're asking the right question. Bunch of great articles online, and that's information we have been getting out and will continue to get out moving forward.
Yeah, great. So I'm going to switch now to the appraisal side that we said we were going to talk about. What are the changes? Are there any changes that have happened from the LO side, from the proper rate side in terms of appraisals and how they're being handled?
Yeah, so again, from the LO side, remember there's appraisal independence rules. So we as a loan officer don't have contact at all with the appraiser, right? So what ends up happening is when our file is ready to order an appraisal, my team pushes a button, that goes to the guaranteed rate, proper rate appraisal desk. At that point, they will scrub the file for exactly what kind of appraisal we need. Now, there's a lot of new guidance on that, which Tom is going to talk about. But our team will look at it, say, hey, what kind of loan is this? Who's the investor? Is it Fannie, Freddie? Is it a jumbo? And what do we need? Do we truly need a full appraisal? Can we do a drive-by, a desktop? Our team will scrub that and then work with our group of appraisers to make sure that we're ordering the right kind and be able to do it with a path of least resistance, sort of a no contact, no impact type of appraisal.
Yeah, that's great because, I think right now no contact is, kind of the biggest messaging out there right now is all of us are, part of this essential business, and moving real estate forward. So, Tom, I wanted to, have you join in with us and give us just kind of a quick overview of, kind of the appraisal process as we see it right now in this environment. And how are you and, your team really, other appraisers limiting contact?
Yes. So obviously a lot of changes, more time on the phone, listening in with Fannie, Freddie, others to figure out exactly the guidance of what was happening, especially when, everything seemed like it was in free fall. So what FHFA have done, they've given flexibilities to the GSEs, Fannie, Freddie, FHA, and VA. And those flexibilities are, for purchases and for refinances, limiting contact inside the homes where, they give us flexibility to do a, more virtual, homeowner assisted, realtor assisted, data gathering, which, we kind of thought that it made sense, common sense from the beginning, but there's just, there's a lot more to it, right? There's a lot of moving parts. Not everything's going to qualify. Cash out refinances, non-conforming jumbos, still are requiring full appraisals. But there are, from an appraiser perspective, USPAP, which is what we have to follow when we do appraisals, USPAP doesn't say that we have to do an interior inspection. It never has. As long as you disclose what you did, you can do many different ways to do an appraisal, but obviously there are certain things that you can't produce, like a floor plan or other things, not having access to a property. So as far as the changes, those are really the big changes. And as far as, limiting contact, it really depends on who you're working with too, with the lenders. Everybody's a little bit different. Not everybody, some people are, some lenders are much more rigid, some are more flexible. We just do everything we can though to limit the contact, limit the touch.
Got it. Thank you. I think you mentioned it. David alluded to it a little bit earlier, but is there any technology now? Because if USPAP has never required an internal walkthrough inspection, then are there tools that you're using that maybe weren't as impactful in the past?
Absolutely. So, there's a lot of, great technology out there, and something that, we've done at Valucentric, we've been doing a team approach to appraising for the last 15 years. We always felt that, just like in real estate and in mortgage and many parts of anything related to real estate, right? Teams are kind of the norm, right? People work in teams to be more efficient, division of labor. So that's something that we've been doing for a long time. So I think for us as a company, the impact of all of this was really a lot less difficult because, we've had field appraisers and back-end team writers and everybody collaborating and working together for such a long time. But, the technology, good old-fashioned, just like we're talking on a Zoom meeting right now, right? FaceTime, Google Hangouts, different things like that. When you're gathering that data from homeowners, not everybody's as tech savvy, right? It really depends on who your audience is to get that. There is third-party off-the-shelf tools that are available from some companies that are out there. That, some of the stuff I'm not crazy about there is, it's a third party and you're putting data of someone's house into a third-party tool. What are they using that for, right? Does the lender really okay that you're using this great third-party free tool? Well, usually, right, when it's free, right, there's a catch. And they could be capturing data and, interiors of people's homes and things. So I think you have to be careful on that. So what really I think the key is just like what you guys do and what Guarantee Rate does, I think, great companies pair people with technology, right? And I think when you put those two things together is the real winner. And that's what we just try to do. So we have a proprietary data, Valucentric data sheet that we send out. It's web-based. It goes to the homeowner or realtor. Anybody can fill it out. And they can put pictures in there. They answer questions about their home. And then we follow that up with an interview of the homeowner, talking to them and having them. Then we can do a FaceTime or what have you, walking us through the house. So really, we can get pretty much everything completed up to that point. Really, I think the sticking point on the virtual or no contact appraisal or whatever you want to call it is the floor plan. That's really the tough one. So I would say to loan officers, realtors, anybody, if anybody has a floor plan that's measured with the gross living area from an old appraisal or what have you, is pretty valuable right now when there's limited contact.
So that's a great point. It's interesting because we've actually always encouraged our brokers to try and get floor plans with every one of their listings for, a number of reasons. We think it's something that's more attractive online. when, buyers are out there and are actually searching properties, they're looking at pictures, but let's face it, oftentimes we want to look at the dimensions and the floor plan. So, we as a company have really sort of encouraged that, over, the last really 5 years. And so, it's kind of funny how now that goes hand in hand with, kind of the new dynamic that we're in. So floor plans are one, I would say would be one aspect or one way a broker and or a seller can help you make the appraisal process seamless. What else can a broker or a seller do, at this point to make sure that the process, moves forward quickly and smoothly on your end of things?
So it's two things, I think, there, right? It's help with access to the property, and it's data. And I think the data side you guys have always provided to us. I can't say it enough. Without assistance from brokers, realtors, I don't know how you produce a credible appraisal without assistance from the professionals that are out there every day doing it. I can't say that enough. It's the realtors. They are the true experts. They transact real estate. That's what they do. Appraisers are, we're experts in valuation, and we need the information from realtors in order to do our job. It's so important, and I think many times people can lose sight of that. Appraisers and others. I think it's really important to remember who's putting the deals together, who's getting the contracts together. And getting all that feedback. Realtors are in broker opens. They've been in every house. They know every story. They know exactly why the Jones house on Spruce Street took 880 days to sell, right? There's a story behind that, and they know that story. So I think that has never changed, and we should never lose sight of the data and the information, whether it's neighborhood related, subject property data, comparable data. That is always critical. Then the physical side of it, again, we talked about the floor plan, condominium information, all of that, and then assisting with access. So if we have to inspect the property, if we have to physically go out there, especially right now, what are we going to do? We're going to request that every door is open, every light is turned on. We don't want to have to touch anything when we go in that house, right? We want to walk in, and we'll have a face covering. We will have gloves on. We will do everything we can to protect ourselves and anybody in the house. In fact, the people don't even have to be in there. They can just let us go through and do our thing if we have to do that. But having it opened up really helps. But again, right, going back to getting the information and data on the front end is critical. The more we can do the due diligence on the front end and have all of this done. And again, and Amy, thanks for bringing up the detailed listings and what App Properties has done with the listings, right? All of that is fantastic. I mean, what you can get off a listing now, right, is, photographs, floor plans, information. So that really helps a lot to limit the contact.
Got it. That's great. And I'm sure you've seen it all, Tom. There's this wide range of brokers, some that, won't even meet at the property and they don't provide any information or any data, all the way to these that, may provide 100 pages of a detailed report. So I think what you're saying is, provide data. Maybe it doesn't need to be 100 pages, but the more information that they provide to the appraiser, the more likely that the appraiser is going to be able to conduct an accurate appraisal. So with that, when you talk about accurate appraisals, we're going to talk about values. And I think that is one of the biggest questions on everyone's minds, which is, what is happening with values right now? And whether it's too early to tell or not, what are you seeing or what's your impression from the appraisal side?
So, we deal in, appraising is, you guys, realtors are in real time, right? You guys are living in competition of active listings, pending sales, and right there at the market. And appraisals, we do everything we can to get to real time and be right there as well. But we've also have lending guidelines and other things that we have to deal with, and proof, right? Proof is closed sale data. So we're always kind of living in between there and relying on you guys for what's happening in the current market. Real estate's a slow moving commodity. And as a result, I think it's going to take several months until we really realize what the true impact of this virus is. Homes sold in March will, close in April, right? And then, we'll move down from there. So anytime you have a disruption to a market and the job loss, right, that we're seeing, I think it's pretty fair to say that we will see some type of impact. And like David mentioned too, with the forbearance and all that kind of stuff and how that is all going to factor in. But that's not what we're here to do, right? We're here to deal with what the data is showing us right now. And, it's not our job to say, be all doom and gloom and say, oh my gosh, it's just going to be terrible and the market's going to be horrible. And, we're going to just automatically deduct a factor on that. I don't think that that's our job to do that. We have to look at what data is. Until we see quarterly market data and sales and proof of what actually is happening, I don't think that we can make a determination with that. We are putting in a COVID-19 addendum into our appraisals. I think the lenders want to, you have to say that you're recognizing what's happening. And every market is unique, just like we saw in the last economic downturn. Some markets came back very quickly. Others maybe still haven't even come back today, right? So you can't just say you take a whole macro market and say this is the market, right? I think you have to go market by market and see. The other side of that too is I think because of this, you're going to see trends possibly change, what people want, right? Maybe people say, I really liked my lifestyle, but having gone through this, I'd really like to be in a different, setting or environment, right? So that could change too. So, I think we have to be responsible and report what we're seeing, but it's not our job to predict the future of what we think is going to happen. We have to let the data show us what our path forward should be.
Yeah, that's right. And if we can predict the future, all four of us are going to be on that beach that David sets up,
Bingo.
Living large. So David Weinberg, Tom Schurer, thank you for joining us today. You've answered so many of the questions that I know we're getting from brokers and that brokers have in their minds. So really appreciate your time. For everyone watching, thank you for joining us today. If you can remember, we put out a request yesterday to send in what you're doing in your community, what you're doing to support your neighbors, your family, your friends, those around you, even if we can't be in person. So please send those to @coaching@properties.com. That's @coaching@properties.com. And we'd love to share those stories. So thank you for doing that. And thank you again, David, Tom.
Thank you.
Amy.
Appreciate
Thanks, guys.
Thank you.
Have a great day.
Okay,
You
bye.
too. Bye-bye.